Hey guys, Matt here with FXPM Software. Now, in this video I want to discuss the difference between momentum trading and contrarian trading. These are two basic philosophical ways of trading, and to trade with our strategy successfully, I think it's important to distinguish these so that you understand what we're looking at. We are a contrarian trader. Now, the majority of traders, I think, and it's been my experience in everyone that I've worked with, typically are taught in the beginning mostly about momentum trading. I think it's because that's what's sexy. That's where you hit home runs, catch big breakouts and all that stuff. The problem is the market ranges more than it's in a hard trend. So you make more consistent money in the contrarian style of trading, or at least that's been my experience and many others that we work with. Whereas momentum trading, you'll hit home runs when you do catch one. They're great, but a lot of times that's when you're in false breakouts, things like that. That happens more often than not. So I want to distinguish these two things so as you progress through our training and learn our strategies, you can understand why we trade the way that we trade. Now let's look at, let's say this is price. And we've got this ranging market here. Let's talk about momentum, what that would look like. So we've got this, resistance level here. We've got this support level. Anytime that we break above the high end of this range, your momentum philosophy, that group of traders is going to be looking to essentially go long. With this trade, and they're looking to play that the momentum breaking out of this range will continue higher. So there's multiple ways a momentum trader may enter a trade, and one would be to buy on the breakout right here where maybe a candlestick closes or something like that. They don't want to miss the trade. The analogy I use with a lot of momentum traders is they have FOMO, which is fear of missing out. So they'll jump in and sometimes they'll place their stops, inside the range so that the price can play around on top of here. Or worse is they'll put their stop loss down below this range. So if the price does, let's say, come back into this range, they're not going to get stopped out unless it breaks below the range, which a lot of times that's what market makers do, is they'll pop out one side of the range, lure people in, bring it back in, and they want to go the other direction. So the safer way to trade momentum would be this way, and this is how we would trade more of a momentum play if that's what we were going to. Our follow the leader, appetizer, those two strategies are specifically for this. You get your initial breakout, and very rarely do these just continue to go. Sometimes they do. You got to chalk that up as, hey, you didn't win, but you didn't lose. It's all good. Now, the way that we trade this would be we wait for a retracement back down, and we look to enter right here. Now, doing this, we can have our stop loss right below, because if it breaks back in and comes back in the range, chances are we're still range bound for a while. There's no sense in hanging on to a trade and just sitting there, when chances are you're going to lose anyways. So we'll take the trade here and in hopes that it goes this way. This way we can keep a nice tight stop loss, reduce our risk, and we still have a chance to catch this overall momentum play out of the breakout. Okay, so that's sort of your two, these are both momentum plays, but kind of a different way of entering the trade. Now let's talk about the contrarian side of things. And technically we've got our range here. It's not a very good one, but there's our resistance, our support. Contrarian style would be you are contrary to the popular sentiment in the market. So if this breaks out, you're essentially looking to go short. You don't think that it's going to go up for very long, and so you're going to bet that it's going to go back down. Now, our strategies and how we trade, most of the time we are taking the position, but what we do is, and that's where the software, in order to be an effective contrarian trader, in my opinion, you've got to have the tools that are going to measure and give you statistical basis to take your trade on. So what we do is, or what the software essentially does, is when we do get a breakout or we get some sort of large move, it's always measuring these moves. And that's these different levels, these dynamic Fibonacci levels are telling you essentially, hey, you know, the price, if it gets outside of the zone, it's not very probable that it's going to continue. So that gives us our levels. It would be a red level here. And so we would take a sell position and look to play it back down. Now, a lot of times, this strategy takes a while for people to get used to. You've got to have trust in your system, and you've got to know that those levels are going to actually cause a reaction for that price. So that's where the learning curve comes in with our system. You've got to learn to trust the system, but the more you trade with it, the more you practice with it, the more you'll realize that more often than not, when the price is, you know, making these moves, all these levels here are being predicted pretty accurately by the dynamic Fibonacci. Because what it's doing is it's measuring this move, it's measuring this move, it's measuring this move, and giving you an accurate support resistance level where the price is going to turn around. So that's why you'll see, you know, we're taking trades at reversals in the market, or, you know, when we get a pullback, what's called a pullback, we're trading that as opposed to jumping in somewhere in the middle of this momentum. So, and what that does, that allows you to keep a very tight stop loss, because you immediately know if you're wrong. You know, if you got in too soon, you may as well take a very small loss and look for the next level to enter again. And because you're only risking at least like less than half of what you're trying to make, even if you're winning 50% of your trades, you still should make money. So again, this is just conceptual theory. I'll continue to record these videos, and hopefully it'll explain a little bit more and get you comfortable with our method, and then you can start going through the details of the strategy as you get involved in the program. All right, so let me know if you have questions, and we'll see you in the next video.